Hello and welcome to Options Guy TV. My name is Brian Overby. I am the author of the Options Playbook, and I'm going to be your host for about the next 30 minutes here. It is Friday. The Fed is in Jackson Hole, and Jay Powell has started talking. And since he started talking, the markets are happy. So what we've seen right now is the S&P 500 index is up 1.23%, and it did jump as soon as Jay Powell started talking. We also saw the VIX drop precipitously. It's down 1.5 points since he started talking, and it's trading as low as $14.70. So I guess the sky's not falling, according to this speech so far. So we're going to do our trade. And as promised, last show on Wednesday, I did it at the end of the show. And now I've taken that to heart and taken my own recommendation. And we're going to do that trade first. We got one more week of daily butterflies that we're going to put on during Options Guy TV. And then we're going to sum them all up and have a educational event on the market holiday for Labor Day. So our last trade did well too. I grabbed a screenshot right at 2 o'clock. The trade was up on our daily SPX. It wasn't up as much as I'd hope. It was up about 25-30 cents, but the market was at the right price. So I'm assuming that on Wednesday, I'm going to take the quote closer to 3 o'clock and see where we were at. Always saying that we're closing these things between 2 and 3 o'clock, or if they move against us, right? But the market stayed pretty stable on Wednesday. Right now, the market is crazy, and I wouldn't have put this trade on without Jay Powell beginning his speech, and he has. And on top of it, I'd probably stay away from this one today because every single word is going to be leaned on. But let's do it. I mean, the market's up. Our rule has been that we're going to, whatever the market is at, that is going to be our outlook. So today we're showing that the market is up, so we're going to get bullish on it. So we're going to do our open wing butterfly. We're going to lean to the bull side of things. We're at 64.75. I already have it all set up. This is going to be our official paper trade for today. We're also going to look at one in UNH. As long as those vols stay high in UNH, I'm going to keep doing this Friday 0 DTE trade. I like that. I did it last week, and I'm going to do it today, and I'm going to put it on my account again. So here we go. 64.65 is the strike. We're 10 points wide. We want to sell the most at the money option contract. We want to get as much time premium as possible. And I still think that it's worth highlighting that you have an at the money option. It's got a half a day left, and it's trading for $10. Like, that has to trade for zero. Well, actually, now it's a little bit in the money, but that has to trade for zero at expiration. And the fact that the VIX has came down is really hurting us. Right now, we see the VIX this trading at 375. When we started the show, it's already 410, 415. Dang it. I don't want to pay $4 for this one. Oh, I like 375 a lot better, and that's where it was when we first started the show. See, I talk too much. I talk way too much. 410, 410, 410. Market's up a point. It was at, well, I guess it was just below 64.75, so it's up a point and a half approximately. And I guess that translates to a quarter on our butterfly. Do they know our show's going on? Is that why they're doing this? Jay Powell, just take a breath, maybe go get some coffee. I don't know. All right, 4 o'clock, I don't know if I can officially say that was a paper trade at 375. And I wasn't even happy with that, Phil. And that is an issue. When vols come in, butterflies go up, right? Especially if you're doing at the money butterflies. So you want to sell as much premium on the middle strike, the 64.75 as you possibly can. And then you want that premium to contract and get the theta decay, and hopefully implied volatility even comes in. So initially you want the vols to be higher. And the fact that the VIX just dropped, now it's 2 points. Yeah, it's even dropping as we speak. It's 14.53. It's down $2.07 right now. So it's dropping quickly as the market is rising quickly. Yeah, I got to adjust it. I'm not gonna pay 375. Oh, but that's the most at the money. That's our rule. All right, it's just a paper trade. Let's do it. We'll say $4. Man, we've been paying. That's the most we've paid. We paid on average. We paid about 330 for these. We do them about the same time every day: Monday, Wednesday, and Friday. 1 day 0 DT open wing butterfly, and the same expiry. We either lean to the put side, we lean to the call side, depending on if the market's up or down. And this is the most that we've ever paid. But the VIX, let me look over the last month. Let's see, as low down around. Yeah, this is the lowest the VIX. The VIX has been here over the last month, but it's only touched the 14 level actually just once. About a month ago, it got down to 1450, but yeah, it's only touched 14 once over the last month. So I guess it makes sense that the VIX is off that much. All right. Oh, there it is, 375, 380. Okay, I'm going to say, let's say 380. Where's the market? It dropped a little bit. Okay, let's put this on for 380. Okay, 380. That's our official paper trade. I'm going to take that screenshot. It's in the what if calculator, so let's go look. That's going to be our price right there. Boom, 380. Market is down a little, but the VIX is really hurting. And if the VIX continues to drop today, that will pay us off quickly. We obviously just saw that the VIX was down 1.5 points, and the difference between the VIX going from being down 1.5 points to down 2.02, that is a big deal. On top of the fact we did have the market pull off just a little bit too. So you combine that, now we're at 380, and that's going to be our price, 380 at the midpoint. All right, what if calculator? Here's our outlook. So by opening the wing, we pay a little bit more for the butterfly, but we only have to be right about either the market can stay where it's at, or the market can drift higher, or even drift a little bit lower, and we're good on this trade. Long as we're down in this area. So right now, this is what the P&L calculator is saying, is that if we go down to this level right here, well, we're still fine right now, but this is where our break even is at expiration, which would be this cost plus this strike. So we don't want to go below that level. So 64.65 plus 380, 64.68.80. That would be ideal. If we can stay anywhere above that, we're profitable on the trade. If we hang out right here, we hit a home run. If we go up to here, it's going to be worth $5. And so $5 minus whatever you paid is what your profit would be in that range. And once again, we're not looking to hit a home run. We're looking, if we put this on for 380 and we take it off for 480, that's a good trade. We take it off for 580, that's a little bit better trade. Don't think that we're going to get the $1,000. And that's what it would be. That's the width of the strikes if it went out right here. It's cash settled. You don't have to worry about assignment. You don't have to, all that happens at the end of the day, if you ride it and you fall asleep and you don't follow our rules, cash is going to be in your account where cash used to not be, or all your cash is going to be gone because we went this direction, right? So it's that simple. It's 0 DTE. That's what it is. You don't adjust. You put it on. You be cognizant of when you put it on. Ideally, I'd put it on at 10:30, not 11, but the show starts at 11. And then you take it off between 2 and 3 o'clock. Depending on where your profit is at, you hope the VIX comes in during the day. That would help with your profitability if you are correct on your forecast and it stays within the wings. Any questions? All right. Did anybody do the trade on Wednesday? If you did and you were willing to share with us, let us know what happened. I took a screen grab right at 2 o'clock, and the trade was up about 25 cents. And I felt like it should have been up more, but it was not. And then I didn't take a screen grab at 3 o'clock, but I'll go back and look at the quotes, and I'm going to set up when I set up my PowerPoint. It's going to be a little bit of work. So make sure you tune in for that Monday show, because I'm going to spend some time putting a PowerPoint together to highlight the way the trades would work and how I would have gotten in and out of the trades. All right, next trade. This trade, all right, I'm going to put this one on. This one's going to be my trade today, and we need to get this thing up and running. I don't have it on yet. and I want to put it on today. Okay, so if you look at UNH, UNH has been in the news. First of all, they were in the news because they got accused of some stuff and the stock went down and it got hurt, but it's kind of one of those things where it's too big to fail. So the markets came back. We saw a lot of insider trading from the CEO and the president of the company coming in and buying a whole boatload at higher prices than where UNH is at. And then good old Berkshire Hathaway, Kate, stepped in and filed their quarterly report. And oh, lo and behold, they bought $1.6 billion worth of UNH, making them one of the largest shareholders in the company, if not the largest. I don't know if they're the largest or not. But with that said, the market ran up 11% and then sat, but the vols skyrocketed. Last week, they were trading as high as, let's send it to the ticket. First of all, let's send this to the ticket. Okay, there's UNH. So this is our trade that we're going to look at if the market hasn't moved too much. And then let's put it up here. Make sure we're in, were we in August? Let's look at our SPX butterfly. Yeah. Just wanted to make sure we are on Friday, August 22nd. I just didn't like now it's at, didn't like the price of that one. Okay, so here's UNH. Vol 43. Okay, it's dropped off a little bit. But these were up around 50 or 60 last Friday. So now they're coming back in. They're getting closer to the historical vol. So this is getting to be less of an exciting trade, but I'm going to put this on. 307.32, 307.32. So that's right at the money. Net debit is $3. Maximum that it can trade for is $5. And then 2.5. Oh, we're not quite getting it done. Vols came in too much. Yeah, so we're not profitable if the market goes up here. That is not the reason why you do an open wing butterfly. So vols have came off, and this trade doesn't look as exciting as it did last Friday. That's how important this implied volatility number was and is when you're trying to put on the butterfly, because we're right where we want to be. 307.50, paying $2.90 for it. We got to pay, we want to pay like $2 for this trade. If we pay $2, the maximum that it could trade for if it went up would be $2.50. All right, I'll make one adjustment, but we might, I don't want to put this trade on if we can't make it profitable if the market goes up. Okay, we're up 307.26. I guess, I mean, it's 5 points. Let's go 7 points. Okay, so then this would be a little bit different. This would be 2.5. Okay, so this would be 7. And if we go 5, that's not going to work. That's 17 cents. Yeah, 7.60. So we'd have to, the only way that we can make this work, we'll go 7.5, and then we'll go 2.5, and it will make the cost go up quite a bit. And then this will be 2.5, leaving this to be 5, and then we got to be under 5. Dang it. Doesn't work. Okay. Clear that one out. 310. Let's look at this one. Because this would mean we're 2.5, because this is 7 and this is 5, then we're 2.5. Yeah, that's not going to work. The only one that's close is this one, and we probably needed to put it on at 10 o'clock. And right now, so if I send this trade in particular, the what if calculator, if the market goes up, we would be down, well, 504, we would be break even. we'd be very close to break even. If it would be close to 5. So send this to the what if calculator. Oops. And let's just take a peek at it. It's tight. Like, it's right here. If it grabbed the $5, that's 480, maybe, right? 486. Where's the market at? 15 cents. So you're just saying that the market needs to stay there. And if it goes up, you make 15 cents. You basically break even on, well, you get a smidge, right? You get a smidge. Depends on how many contracts you did. But if it goes down and it gets below, we're paying $304.85. That would be the break even. $304.85. Saying it's right here. That is our break even point. Yeah, I don't like this as much as I did. I mean, obviously, the vols coming off have changed it quite a bit. We'll leave it on. I'll take it. I got to look at the SPX there, but I don't think I'm going to put this one on today. But let's leave it on as an experiment and talk about it. I want to fill it at. I definitely am not going to pay much more than $5. I want to pay $5 or less to put this trade on, because that means that if we're wrong about the forecast and the market takes off to the upside, that we could at least break even on the trade. Fair enough. Took Wednesday's trade as a scratch. All right, Kurt. Yeah, well, I saw it. I was up 25 cents, but Kurt, what time did you get out? Do you know the time? My screen grab that I took was right at 2 o'clock. And like I said, I was disappointed, but I also screwed around a little bit, and we didn't put the trade on until about 11:30, which was a kind of a big deal. So I'm kind of curious if you know what time it executed. If not, no big deal. All right. So this was my uneventful trade in UNH. It looked a little bit better this morning. Now it's not that enticing. Next week we have more retail, a lot more retail coming out as far as earnings. We got Kohl's in the morning. We got Best Buy. Dell Computing is going to be announcing on Thursday after the close. So Dell will be an interesting 0 DTE trade on Friday. We got Dick's Sporting Goods, TD Bank. So we got a couple more financials. What else? Oh, that's right. We got NVIDIA after the close on Wednesday. I actually forgot about that. So that's definitely a big one, right? NVIDIA, everybody hopes that they get mentioned in their earning conference. If you have a company and you can be mentioned by Jensen in the conference call, that's usually a good thing for that stock. So that's on Wednesday. Yeah, so interesting week coming up. I don't think I did a good job of talking people into the UNH trade. It looked a lot, I got to admit, it looked a lot better at 10 o'clock than it does right now. And that's it for this edition of Options Guide TV. We'll be back on Monday looking to do a couple more earnings trades. We will also continue with our 0 DTE butterfly. The VIX going up would be helpful to make our butterflies a little cheaper, a little less risk. Much rather do 0 DTE butterflies with the VIX at 16. But, so it's a catch-22. If the VIX is trading at 16, that's implying that the marketplace, and obviously it's not, you want to look at one-day vol, but we have access to the VIX, right? So you want to look at one-day vol, that's your best bet. But you want vols to be higher when you're putting on a butterfly. But then again, higher vols means that the marketplace thinks there's chances for more volatility. So when that happens, when all of that is said and done, the 0 DTE butterflies go up. They go up when the VIX is down. And I'd just rather not have the risk and hope that the volatility, stays in check for a half a day. And that's where we're at. All right. See you on Monday, 11 a.m. Eastern time. Set your reminder right now on your phone. You don't want to miss out on another edition of the Options Guide TV. Thanks for stopping in.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.